Before we begin, let me ask you something. Have you ever felt like the harder you work, the more you lose to taxes, while the rich seem to live tax-free? You're not imagining it. In this video, we'll expose why the poor actually pay more, not less, than the rich, and how that's not a mistake, it's a feature of the system. Stick with us until the end, because once you understand this, you'll never look at your paycheck, or your future, the same way again. They told you taxes are fair, that everyone pays their share, that the rich are taxed the most, because they make the most. They lied. In reality, the people who carry the tax burden of this country aren't the ones flying private jets or buying third homes in Aspen. It's the everyday workers, the delivery drivers, the cashiers, the freelancers, the small business hustlers, the middle-class families just trying to stay afloat. These are the people propping up a system designed to bleed them dry, slowly, invisibly, legally. This isn't a glitch in the system. It's not bad luck. It's intentional design. Because while the rich write the rules, the rest of us are forced to play the game, and that game is rigged from the start. You pay taxes on every paycheck, every hour you grind, every dollar you earn. Meanwhile, billionaires borrow against their assets, live off appreciation, and pay little to nothing in income tax. Take Jeff Bezos, for instance. In 2007, when his wealth was skyrocketing, he paid no federal income tax, according to ProPublica's analysis of IRS data, by borrowing against his Amazon stock instead of selling it. And even when they do pay, it's often at a lower rate than you. Sound crazy? It's not. It's the American tax code in action. And you're the one funding the machine. You see, the tax system was built with layers that hide secrets about deductions you'll never qualify for, loopholes you'll never learn, and advantages you'll never touch unless you own assets, companies, or political influence. The poor pay more, not because they make more, but because they can't escape the default settings. They don't have LLCs. They don't offshore income. They don't hire $800/hour accountants to move money like shadows. They earn, get taxed, and spend what's left. That's the whole story. But for the rich? The story runs in reverse. They earn, then deduct, then defer, then borrow, then invest. And only after all that, maybe, they pay something. But even then, it's often less, percentage-wise, than what a teacher, a nurse, or a warehouse worker pays. Consider Elon Musk, who, per the same ProPublica report, paid no federal income tax in 2018 despite his wealth growing by billions, thanks to stock options and loans. And still, the narrative blames the poor. They don't pay enough, the pundits cry. Half of Americans pay no federal income tax. But what they don't tell you is that same half pays payroll tax, sales tax, property tax, gas tax, state tax, and endless fees stacked upon fees. Let's break it down with an example. A single mother earning $30,000 a year might owe no federal income tax due to the Earned Income Tax Credit, but she's still hit with a 7.65% payroll tax, $2,295, plus 5% state sales tax on her grocery bill, and property taxes baked into her rent. That's thousands more annually, while a billionaire like Warren Buffett famously pays a lower effective tax rate, 17.4% in 2010, than his secretary. They pay taxes on their groceries, gas, phone bills, clothes, cars, homes, and utilities. In America, there's a tax on simply being alive when you're not rich. And yet, the conversation always circles back to one thing: income tax, the narrowest slice of the entire tax pie. Because it's easier to say they pay nothing than to admit they carry everything but still sink. Let's go deeper. The numbers don't lie. Imagine two people living very different financial lives. One makes $60,000 a year from a traditional job. W-2 income. Taxes withheld automatically. No deductions. No shelters. No tricks. The other? Owns $10 million in stock. Doesn't sell. Doesn't work. Borrows $400,000 a year against those assets. Pays virtually nothing in tax. So, who's actually taxed more? Now tell me again, who's really funding this country? Let's run the numbers. The $60,000 earner faces a federal income tax of about 12% after the standard deduction, $7,200, plus 7.65% payroll tax, totaling around $11,790 in taxes, nearly 20% of their income. Meanwhile, The $10 million stock owner pays 0% on unrealized gains and, with interest on the loan deductible, might pay under 1% on the borrowed $400,000. That's a stark contrast. And it's not unique. Studies like those from the Institute on Taxation and Economic Policy, ITEP, show the bottom 20% of earners pay up to 20.2% of their income in total taxes, while the top 1% pay 7.4% when all taxes are considered. And here's where it gets even darker: the system trains you to accept this injustice as normal. It teaches you to fear the IRS, but never question who wrote the rules. It shames you for wanting a refund, yet applauds billionaires for maximizing efficiency. It glorifies tax avoidance at the top and criminalizes it at the bottom. Take the case of Wesley Snipes, who served prison time for tax evasion on $13.8 million, while corporate giants like General Electric paid no federal income tax on $3.5 billion in profits in 2018, per their own filings. The politicians you vote for? Many of them are funded by donors who demand tax breaks in return. The lobbyists who write legislation? They work for firms that help the rich stay untouchable. The news media that reports on tax policy? Often owned by billionaires who benefit from the current system. Look at Rupert Murdoch's News Corp, which paid no UK corporation tax in 2020 despite £1.8 billion in revenue, thanks to legal offsets. So here's the question for you to answer in the comments: do you believe the tax system is designed to keep the poor down, or do you think it's just broken by accident? Because if we don't ask these questions, if we don't challenge the story we've been fed, then the system keeps rolling. Quietly. Efficiently. Brutally. It's time to stop thinking of taxes as a civic duty and start recognizing them for what they often are: a wealth extraction machine disguised as fairness. If you're not building wealth, you're being drained by it. And if you're not taught how to navigate the system will consume everything you have, piece by piece, generation after generation. But here's the twist: they'll still call it freedom. Drop a comment below, share this message, and remember, the system only works when you stay quiet. And you? You're done being quiet. The invisible taxes, what they don't show you. Now let's go deeper. Let's talk about the invisible taxes, the ones that aren't itemized on a pay stub, but drain you every year. Time tax. Stress tax. Information tax. These aren't levied by the IRS, but by the structure of the economy itself. When you don't have access to tax professionals, when you spend hours researching how to file deductions you're not even sure you qualify for, when your job offers no retirement plan and you have to figure it all out yourself, that's a hidden tax. And it's one the poor pay with interest. Take a single father working 2 jobs, earning $35,000 a year. He spends 10 hours a month deciphering tax forms, missing family time, and still misses deductions because he can't afford a CPA. That's 120 hours a year, time he could have used to learn a skill or side hustle. Contrast that with a millionaire who pays $1,000 for a tax strategist to save $50,000. The time tax hits hardest where resources are scarcest. It doesn't stop there. When you're poor, your mistakes cost more. Bounce a check? That's a $35 overdraft fee. Pay your rent 1 day late? Add a $75 penalty. Can't afford insurance? Hope nothing happens. Get sick without coverage? That's a medical debt that follows you for a decade. Miss a payment on a loan? That's a credit score hit, and higher rates on everything you borrow moving forward. A 2021 study by the Federal Reserve found low-income households pay an average of $2,300 annually in such fees, a burden the rich sidestep with cash reserves. So the poor don't just pay more in taxes. They pay more for being poor. And now let's address inflation. You've heard it called the silent tax. But it's only silent to those who aren't listening. While wages stagnate, prices rise. Essentials go up: rent, food, fuel, while your paycheck lags behind. And what's worse? The rich benefit from inflation. Why? Because they own the assets that inflate. They own real estate. They own equities. They own businesses. When inflation hits, their asset values rise. And the Fed pumps more liquidity into markets to stabilize things, which boosts those same assets even higher. Take a landlord with a $1 million property portfolio. With 5% inflation, that portfolio jumps to $1.05 million in value, while your rent increases from $1,200 to $1,260. Meanwhile, Your groceries cost 20% more than last year. Your rent is up. Your car payment ballooned. And your salary? Maybe a 2% raise, if you're lucky. This is why wealth inequality isn't a side effect. It's a direct result. The Congressional Budget Office reported in 2022 that the top 10% of Americans hold 70% of total U.S. wealth, a gap widened by inflation favoring asset owners. Now, let's pull the curtain back on lobbying. Every year, billion-dollar corporations spend hundreds of millions lobbying Congress, not for better roads or healthcare, but for tax carve-outs. Industry-specific breaks. Offshore loopholes. Accelerated depreciation schedules. And it works. Because for every dollar spent lobbying, those corporations often see returns of $100 or more in tax savings. That's not policy. That's legalized bribery. Consider Amazon, which spent $20 million on lobbying in 2021 and paid no federal income tax on $7.2 billion in profits, thanks to tax credits and deductions. Who fills the gap left by their avoidance? You do. Your payroll taxes. Your state income tax. Your consumption taxes. A 2020 Oxfam report estimated corporations dodged $100 billion in U.S. taxes annually, shifting that burden onto workers. So, what's the solution? It starts with awareness. You need to understand that tax codes are not written for workers, they're written for owners. But you can become one. Even without millions in capital, you can learn to play by the rules of wealth. Open a legal entity. Track expenses. Invest through tax-advantaged accounts. Learn about SEP IRAs, solo 401ks, HSA accounts. These are not just for the elite. They're for anyone willing to learn. For example, a freelance graphic designer earning $50,000 can set up an LLC, deduct business expenses like a new laptop, $1,500, and contribute $6,000 to a SEP IRA, reducing taxable income significantly. Then, take that knowledge and compound it. Automate your investing. Build credit strategically. Create a side hustle that becomes a business. Reinvest into assets, not liabilities. And teach your kids early. Because the only thing more powerful than generational wealth is generational knowledge. Picture a family where the parent starts a $200 per month investment in an S&P 500 ETF at age 30. By age 60, with 6% annual growth, that's over $200,000, money their kids can inherit and grow further. And now, ask yourself this: what if 1 million people watched this video and actually acted on it? What if 10 million did? What would happen if a generation of workers stopped accepting the narrative and started writing their own? That's what scares the system. Because the moment you understand that freedom isn't granted, it's built, everything changes. And that's what this channel is here for. To show you how to build it. Step by step. Mindset by mindset. Asset by asset. Take a delivery driver who starts a side gig delivering food with his own car. He deducts gas, $2,000 per year, and maintenance, $1,000 per year, saving $900 in taxes, and invests the rest into a Roth IRA. In 20 years, that could be $50,000, proof that small moves compound. So if this resonated with you, drop a comment below. Share this with someone you care about. And hit that subscribe button, because we're just getting started. Tell us in the comments, what's one step you'll take today to start building wealth? Maybe it's opening a brokerage account. Maybe it's cutting one subscription. Whatever it is, start now. This video is for educational purposes only and does not constitute financial advice. Always consult with a licensed financial professional before making any decisions.